Ladies and gentlemen, good day and welcome to the Oriental Carbon and Chemicals Limited Q4 and FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akshat Goenka, Promoter and Managing Director of OCCL Limited. Thank you and over to you, sir.
Good afternoon and a very warm welcome to everyone. Along with me, I have Mr. Anurag Jain, CFO, and SGA, our Investor Relation Advisors. Before we begin, I hope you and your loved ones are keeping safe and healthy. We have uploaded our results and investor presentation for the quarter and full year ended.
Participants kindly be online. We'll reconnect the management. We have the management reconnected. Can you proceed?
Sorry, we were having some technical challenges. I'll start from the beginning. Good afternoon and a very warm welcome to everyone. Along with me, I have Mr. Anurag Jain, CFO, and SGA, Investor Relations Advisors. Before we begin, I hope you and your loved ones are keeping safe and healthy. We have uploaded our results and investor presentation for the quarter and full year ended 31st March 2022 on the stock exchanges and company website. Hope each one of you had a chance to go through the same. Firstly, I am pleased to share that the Board of Directors have recommended a final dividend of Rs 7 per equity share in addition to an interim dividend declared of Rs 7 per equity share in November 2021, thereby giving total dividend of Rs 14 per equity share for the financial year 21-22. That is 140% of the face value of Rs 10 each. This is 35% of our PAT, the highest ever payout percentage and in line with our new dividend policy. FY22 was a year marked by COVID waves, high commodity prices, freight costs and geopolitical issues. We have witnessed demand slowdown in domestic as well as international markets on account of the Russia-Ukraine war. Cost of our major raw materials, sulfur and coating oil have been rising. Since 65% of our sales are export related, we are also faced the impact of very high freight costs like all other industries. Supply-led disruptions have impacted our margins and profitability during the year. We have judiciously taken measures towards controlling costs. We have also taken a few price increases during the year and have further increased prices to cover the increased costs in the upcoming quarter for both domestic and international markets. Coming to our expansion plan, I would like to mention that phase 1 of IS plant of 5,500 metric tons per annum was commissioned on 21st December 2021. The total capacity of insoluble sulfur now stands at approximately 40,000 metric tons per annum. The ramping up of this new capacity shall take a few quarters. The company has also commissioned its additional capacity of sulfuric acid plant of 50,000 metric tons per annum at Dharuhera, Haryana. Now the total manufacturing capacity of sulfuric acid stands at approximately 90,000 metric tons per annum. We shall plan for the second phase of insoluble sulfur expansion depending on the visibility of demand and market scenario. I would also like to announce that our company incorporated a wholly owned subsidiary called OCCL Limited on 25th March 2022. It has been incorporated to carry on the business of manufacturing, sale and purchases of all types of chemical products. Coming to our scheme of arrangement that the Board of Directors has just considered and approved between our company and OCCL Limited, our wholly owned subsidiary and their respective shareholders and creditors for the demerger of the chemical business undertaking of the company to OCCL Limited. The appointed date of the scheme is the effective date and the scheme is subject to approval of requisite regulatory authorities and shareholders. As part of an overall strategy for the optimum running, growth and development of the businesses of the demerged company, it is considered desirable and expedient to reorganize and reconstruct the demerged company by demerging its chemical business to the resulting company. It will result in the creation of two separate, robust entities, the resulting company OCCL Limited, which will focus exclusively on the chemical business, and the demerged company being the current one, which shall continue to be in the business of investments and would also intend to initiate some commodity trading business. Our chemical business includes insoluble sulfur, acid, and oleum. The rationale behind this demerger is value unlocking of the respective businesses, flexibility in accessing capital, and enabling to attract business-specific partners and investors. The demerger would also enable management to focus on pursuing revenue growth and other expansion opportunities in the respective business verticals in future. Upon the scheme being effective, the resulting company shall issue and allot 5 fully paid up equity share of rupees 2 each of the resulting company, credited as fully paid up for every 1 fully paid up equity share of rupees 10 each of the demerged company. This share swap ratio will increase liquidity in the stock, benefiting all shareholders. Overall, this news is great for all shareholders. It will give everyone an opportunity to be part of two distinct businesses without overlap and keep us ready to take advantage of evolving opportunities in the future for both businesses. We are also delighted to announce that the company has been accredited with Responsible Care logo by the Indian Chemical Council for a period of 3 years up to March 2025. This is a very important recognition of our sustainability ethos and credentials. We have also received 2 awards from our customers on sustainability. Tire industry outlook looks positive, and with many tire companies announcing capex plans of approximately 5,000 crores for this fiscal. Strong demand expected from replacement market and OEM. Demand would be driven by higher government spending and increasing fleet utilization. Also, demand for commercial vehicles is expected to remain favorable, supported by accelerated economic activities. To conclude, we believe challenges in the external environment are short-term and shall taper down soon. With our completion of capacity expansion, we are confident of gaining new orders and increasing wallet share. Now I would like to hand over the line to Mr. Anurag Jain to update you on the financial performance of the company.
Thank you, Akshat. I would take you all through the standalone financials of the company. Total income for Q4 FY22 stood at rupees 110.8 crores as compared to rupees 106.9 crores in Q4 FY21, a growth of 4% year-on-year. Demand was impacted initially at the start of quarter on account of third wave and geopolitical issues. EBITDA for Q4 FY22 stood at rupees 16.7 crores with EBITDA margin of 15.1%. Margins have been impacted due to the sharp increase in raw material prices and high freight costs. We have taken price increases to cover the increased costs and shall take further and have taken further in the upcoming quarter for both domestic and international markets. Profit after tax for Q4 FY22 stood at rupees 4.3 crores. Profitability was impacted on account of supply-led volatility and inflationary pressure on input costs. To quickly summarize the full year numbers, total income for FY22 stood at rupees 393.9 crores as compared to rupees 344.7 crores, a growth of 14%. The EBITDA stood at rupees 83.5 crores with margins at 21%. Profit after tax for FY22 stood at 39.9 crores and PAT margins were at 10%. With this, I would like to open the floor for questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nikhil from SIMPL. Kindly proceed.
Yeah, hi. Good afternoon. Am I audible?
Yes.
Yeah, 2 questions, sir. One is on this demerger. 2-3 clarifications which I wanted. In the note, we say investments will go into the demerged entity. The current investments, which is in form of cash, that will remain with this company or that will also go to the investment company. So on the current investment, where it will go? And secondly, on Duncan, the holding which OCCL has, which of the companies would be will be given the holding of Duncan as such?
Okay. One thing I'd like to clarify that the investment company will be the current company as we all know it today, and it is the chemical business which will go into the new company. So that is one clarification for everybody. Duncan is expected to remain in the current investment company. As far as which investments and which cash go here and there, this is a call that will be taken by the board right before the actual demerger takes place. The call will be taken basis looking at all the business requirements of the chemical business. Appropriate cash will be left with the chemical business to meet all its needs and keep it safe. And probably the balance will remain in the investment company. But this will only be taken at that stage. This will have quite a number of months to go and looking at the situation at that time.
Okay. And secondly, on the investment, you in your opening comment, you mentioned that the investment company will have options to look at more investment. So I'm not clear. So what would be the whole idea of purpose of this company going forward? Like what kind of investment? So we had this real estate investments or some of those. So those will be taken up, or what will be the whole purpose of these investments?
So let me take a step back and answer overall what is the one of the reasons and the importances of this whole demerger. So when a lot of times we've been listening to our shareholders say, sorry, one second. So yeah, a lot of time we've been told by our shareholders that they want to invest only in the insoluble sulfur. They don't want to have investments in other diversified businesses. They don't want to have things in investments. So that is the reason we thought that for the shareholders it would be fair to create an entity which has only the insoluble sulfur and related businesses. So they can choose to be only a part of that. And once that is created, it would also become attractive for external investors or strategic investors to come into a clean insoluble sulfur entity. Now, as far as the investment business is concerned, we'll continue to evaluate different opportunities. It's too early to say today what we will get into, but there are various things that could evolve as time goes on.
Sure. On the business side, I have a few questions. Now, I'm unable to connect the dots because if I look at the performance for China Sunshine insoluble sulfur or even for Shikoku in terms of their inorganic chemicals business, which majorly is insoluble sulfur, both the companies are talking about the price increases have been significant in the industry, and as a result, the performance has improved significantly in the last 6 months. But contrarily, our performance has been significantly impacted in the last 6 months. So our gross at the material cost itself which was around 70, 75, is now come down to 60, 65. So I'm unable to connect what are the key pressure points which we are seeing and why are we not able to completely pass on the pricing when our competitors, two largest competitors, are saying that pricing is happening in the industry and they are actually seeing the benefit of them.
So I will answer, first I will talk about the competitors. The competitors have much larger businesses than we have, and they have bundle of products. So for them to say that they have got increased prices doesn't necessarily mean for insoluble sulfur. And as far as our information goes, as far as profitability from insoluble sulfur goes, none of them is better than us. Right? And one of the reasons we were not able to increase price in the last quarter was because internationally the price didn't go up. The second part is that as far as raw material costs are concerned, they have risen significantly over the last year. And I will just give you one example, that the total cost of sulfur, I was just looking at the numbers, has grown up by about 123% over the same quarter last year. So it's 2.25 times what it was over the same quarter last year. Similarly, the total input cost has grown by 70% over last year, quarter to quarter. So this is a cost which has gone up. The prices could not be increased. We have obviously taken a price increase because they happen quarter to quarter in Q1 of the current year. Unfortunately, what was happening earlier was whenever we were able to extract as much price increase as we could, the raw material prices will move up further, negating those price increases. So that was the sum total effect that we saw in Q4.
Okay, but sir, I understand that what you are saying, that both the companies are much larger and have more businesses, but I'm specifically talking on Shikoku's inorganic chemical segment, where they themselves mentioned that insoluble sulfur is the largest business for them in the inorganic chemical, and which they report separately. So my confusion had come from that angle, that's all.
So where I'm not aware of that insoluble sulfur is largest, because they have CH2 and all of those things also. If there is such a report and such a result, then we would also love to review it and see what is going on in there. So maybe we have not seen it, what you're referring to.
Okay, so effectively, if we look at it, would we have passed on most of the cost increases now in what we have faced over the last 6 months, or where are we as of now in terms of prices versus cost increase?
As I said that earlier, whatever little cost increase we could pass on, we could manage to pass on. Because of the competition, we couldn't pass all of it. We did, but it was not all of the cost which was passed, and costs increased further in each quarter. In Q1, we were able to pass on most of the cost increases. So the level of cost increase which has been passed on Q1 is better than what it was in the earlier quarter.
Sure, I'll come back to the queue. I have few more questions.
Yeah.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Samarth Singh from TPF Capital. Kindly proceed.
Good afternoon. Thank you for the opportunity. Just QOQ on our operating expense, I think there's a 6.5 crore increase between quarter 4 and quarter 3. Now, I believe our freight rates were stable between Q3 and Q4. So what is the reason for this large increase in operating expenses?
So you're talking about from 32 crores to 38.97 crores. That is the figure you're talking about. So in Q4 to Q4, the major increase is in freight and power and fuel.
This is Q3 to Q4, you're saying?
From Q4 to Q4, I'm saying.
No, I'm saying Q3. So third quarter of the year, we had our operating expenses was 32.3 crores. and the fourth quarter was 38.9. And I think third quarter we had mentioned that freight rates have now stabilized. So I'm just wondering when.
So there again, there was a major increase in power and fuel costs. So that was major increase. And then there was a change in inventory which was negative in the last quarter by 3 crores and positive this quarter by 3 crores, 3.5 crores. So that was these were the two major changes which has happened.
The change in inventory will become under cost of goods, right? That will not affect the operating expense.
Change in inventory gets change in inventory to fixed cost. Fixed cost. Fixed cost. Fixed cost has increased from this. One moment, give me one moment. So major increase of about 2.5 crores is in fuel. Rest is in fixed cost, which mainly consists of some repairs which could not be taken earlier and which were taken during the quarter. So it would be the same for the whole year, but they were more concentrated in the quarter. So that is the main loss. And the second is the reinstatement of our foreign currency exposure, which was in profit. Foreign currency exposure was in profit in December and it went into loss in March. So these are the two major issues where the costs have increased.
I see. Okay. And I'm assuming the fuel costs have remained elevated and that will continue.
So other costs have been in the same, in the same ballpark with inflation and all that.
Right. Okay. Okay. And I know you don't give volume numbers, but if I just compare financial year 22 volumes to 2020 and 2019, can you give me the sort of degrowth between 2019 and 2022 and 2019 and 2020 and 2022?
So let me say that the volumes have increased slightly over last year. So there has been a slight increase in volumes, but the turnover increase that you see is mostly driven by price rise. But having said that, there has been increase over 2021 in 21-22.
Okay, but if I compare to year 2019, which was like one of our best years, what has been the sort of degrowth compared to 2019?
I will have to come back to you on that. I will come back to you on that 2019. I don't have that number of 18-19 in front of me just.
Okay, and then just one last question on something you answered to the previous participant. So is the demand and the competitive scenario such that you see us at least being able to pass on all the raw material cost pressures, given the lag over the next few quarters, assuming now they remain stable, even though we may not be able to pass on our freight and our power costs? Is my understanding correct?
So there are two aspects. One is the freight and one is the raw material and power cost. It is very difficult to pass on the increase in freight costs because you have competitors who have many plants in the respective geographies. So that is something which we find difficult to pass on. As far as raw material costs are concerned, we have seen that in this quarter, our competitors have been increasing costs because their margins have been impacted very badly, worse than us, and therefore we could also increase costs. For next quarter, it will depend on how the raw material and fuel costs behave in the next 3 months.
Okay, I will get back in queue. Thank you so much.
Thank you. Participants, if you wish to ask a question, kindly press star 1.
Before you start the question, there was a question which I said I will come back later on, which was whether our volumes, how do they compare with 18-19? So they are in roughly the same ballpark in 21-22.
Thank you.
That is the tonnage of. Yeah.
The next question is from the line of Anuj Sharma from M3 Investment. Kindly proceed.
Yeah, thank you. Am I audible?
Yes, you are.
Yeah, thank you. So, just Just an understanding. So
You are not now. Now suddenly the voice volume has dropped. Can you come closer to the mic or speak loudly, please?
yeah, I hope this is better.
Yeah.
Yeah. So, we generally see that chemical companies generally choose to allocate their retained earnings in related or allied segments so that they could leverage relationships and synergies. However, we chose a different part of investment, a different path of allocating the retained earnings. So, just wanted to understand what competencies do we have in investments that we chose to allocate capital there?
So to answer these kind of questions only now we are going for the demerger. Na? So each company will have its own relevant set of competencies built up.
Yeah, but if you were to highlight your competencies in the investment field, what would they be?
So we have a separate team for it. We have a separate team for it. It is not, let us say, for example, Anurag is not doing investments. There is a separate team for it.
All right, but
when there will be two companies, they will be run with their own set of competencies and their own skills. This is the answer to this question is why this demerger is very important.
All right. So my next question is, over a period of time, the demerged entity, which is insoluble sulfur, will again start generating cash. So how would this cash be allocated? Would it be remaining in the chemical?
For this, you should look at the very nice dividend policy that we have come out with this year, which says that 50% of PAT will be paid out as dividend, which is almost the entire free cash flow. Right. So this entity will pay out dividend. It will grow in insoluble sulfur, grow in related things, pay out dividend, pay down debt. Very clean.
Right. So that demarcation of the demerged entity, the incremental retained earnings will remain in the chemical or related fields.
Or dividend.
All right. And generally, in terms of pricing, can it be that some competitors have a better pricing than us and hence they seem to indicate better pricing power? Or is it a very, very homogeneous market wherein the pricing remains constant for everyone?
When you say pricing power, you mean the power to price their product or power to purchase?
The power to sell insoluble sulfur to the tire company.
Power to sell would obviously, the competency will be different in different geographies for each producer. For example, if you were to go to China, then the Chinese producer will have an edge. If somebody was to come in India, the Indian producer will have an edge. So if we were to go to Japan, then Shikoku will have an edge. So this competency will differ from geography to geography. But we have managed to compete in each geography till date.
Right. No, so what I was trying to understand that can the pricing vary significantly across geographies? Because if some players do indicate that they are seeing an uptick in pricing, all right, and we don't seem to, so could that be a function of different operating in different geographies? Or,
no.
It...
So I have disagreed with what the earlier person said that they are enjoying a huge bumper profits while we are not on insoluble sulfur. That is not my understanding, first of all. And secondly, as I said, that we are matching or we are competitive in each geographies. Obviously, the margins would differ to the extent of the freight differences in each area, and how we are able to deliver the material. For example, today if the freights are high, that hits our margin today. But whether that will remain that way or not is questionable for a long time.
All right. I have one question before I come back in the queue. So generally in the investments, in the chemical business, you would have a minimum basic IRR which you would want to generate. Similarly, in the investment business, what is the minimum IRR you seek to generate or seek to look at, below which you wouldn't want to do business?
So the basic qualifying IRR for capital investments remains the same. Now it changes based on the risk of that thing. So if you were to ask me, risk-adjusted IRR remains the same. In terms of absolute IRR, that differs from the riskiness of the investment.
All right. I'll come back in the queue. Thank you.
Thank you. To ask a question, kindly press star 1. The next question is from the line of Umang Shah from Sarat Capital. Kindly proceed.
Hi, sir. Thank you for the opportunity. Sir, the first question is, would you be okay sharing the fair value of the investments that you have in your balance sheet, which will be remaining in the investment company?
Sorry, I didn't hear the question. Can you repeat, please? The fair value of
Sir, the fair value of the investments that will remain in the investment company.
See, as I said in the earlier question, that this final decision will be taken by the board right before the demerger actually takes place. Apart from that, there are a number of documents that are soon going to be filed with the stock exchanges, which will provide some indication.
Right. Sure, sir. Sir, the second question is there any plan? So the thing is, these investments have come from the cash generated by the insoluble sulfur company. So going forward, once the demerger happens, will there be any cash moving from the chemical company to the investment company, or that won't happen?
So these are going to become two separate companies, right? So then the cash cannot, once the demerger takes place, cash cannot just randomly move between two companies.
Right, sir. And sir, in terms of management bandwidth, right, I think the top management for Duncan Engineering and for Oriental Carbon right now is the same. Any?
In me, then yes, but nobody else is the same.
Okay. It's just you.
It's just me.
Right. And sir, one more question was, after the acquisition of Eastman Chemicals by One Rock, what has been their behavior as far as price increases are concerned in the last 6 months?
See, the only interesting thing that I can share is that once they took charge of Eastman Chemicals, they have actually gone for a change in the top management. And their new CEO has only joined in April, so it's barely been a month and a half. So unfortunately, it is too soon for us to see what is happening or what. Something must have been part of the internal strategy for them to change the CEO after a few months. So I think it will be only now in the next few months what the new CEO does and how he takes the company forward.
Right. And sir, these management changes or so does it help our chances in increasing our market share in North America? I think that is a geography they are dominant in.
No, I don't think it would be fair to comment on their management changes and link it to our prospects.
Right, sir.
General matter, they're a very big company.
Right, sir.
You should know
that. Right, sir. And sir, one last question. Some quarters back here alluded to a fact that at today's prices of insoluble sulfur, no greenfield capacity can actually come up, which could actually mean that there is significant overcapacity in the industry. So what is it the change in commercial vehicle sales that commercial vehicle usage of tires has it changed that back, or how long do you think will this overcapacity persist, if any?
See, how long overcapacity will remain is very difficult to predict. Because that, predicting the exact growth rates and all of these things. I still maintain that investment economics is even worse today than what it was a year or so ago when I made this statement. It has only worsened. It has not improved from that day.
Right. So, sir, is that worsened because the volume of insoluble sulfur being sold is less, or is it because new capacity from China is selling in the global market?
No, I think it could be for various reasons. Firstly, I am not aware of Chinese quantity being sold in the global market, so I'd like to clarify that upfront. I have not heard of Chinese capacity being sold in the global market, but China itself was a big consumer, where our competitors have been exporting to China. Maybe that has dried up. Maybe various things have happened. Costs have gone up. Freight. There's a lot of turmoil that is happening in the market. I don't think right now is the time to draw any long-term trends or things out of.
Right. All right, sir. These were some of the questions. Thank you so much.
Thank you.
Thank you. Participants who wish to ask a question may kindly press star 1. The next question is from the line of Anurag Patil from Roha Asset Managers. Kindly proceed.
Thank you for the opportunity. So, sir, in Q1, can we say the demand has actually improved sequentially compared to Q4?
We are seeing some positive growth indications. We expect to sell more in Q1 than in Q4. So we are seeing some positive trends in Q.
Okay. And sir, this phase 1 capex, can we say full utilization will be possible by the year end, FY23?
So yes, that is what we feel, that we should start utilizing that capacity gainfully by Q4.
Okay. That's it from my side. Thank you very much.
Thank you. The next question is from the line of Omkar Ranjan from Nirvana Ventures. Kindly proceed.
Hi, sir. Thanks for the opportunity. Am I audible?
Yes, sir, we can hear you.
Yeah. I have a very basic query on the demerger. So, as I understand, for every 1 share of the current company, investors will get 5 shares of OCCL Limited. And OCCL Limited will be eventually listed. And what happens to the listing status of the current company that remains to be listed? Or is there any plans to take it private?
No. Current company remains active. Regarding plans to take it private or not, see, this is nothing to do with the demerger. These are, but as part of the demerger scheme is concerned, the new company will be listed and the current company will also be listed. Both will.
Sure, sir. And in terms of P&L, 97% is the contribution of the chemical business that would go to OCCL. Can you share the percentage of assets in terms of fair value, if you have to bifurcate between the current company and the chemical business?
So I have answered this question to already that the final decision will be taken by the board right before the they cannot decide today, and all that will be filed with the stock exchanges soon. So that will provide some indications as to what is the situation.
Sure, sir. Thanks. I don't have any incremental query. Thank you.
Thanks. One important point I'd just like to make that you alluded to. So in this share swap ratio of 5 shares against 1, so this is again another very shareholder-friendly move, friendly for all shareholders, because for quite some time we have been getting feedback that shareholders would like more liquidity in our stock. So that is also something we have taken care of in this demerger scheme.
Thank you. Participants with questions, kindly press star 1. The next question is from the line of Mohit Kumra from Kumra Investment Company. Kindly proceed.
Yeah, hi. Hello?
Yes, sir, we can hear you.
Hello, can you hear me? Hello?
Mr. Kumra, we can hear you. Kindly proceed.
Yeah, so as of this moment, I'm just trying to look back a little on your balance sheet. On the non-current investments, it's around 70 crores and current investments is around 110 crores, right? Roundaboutish. So,
Yes,
okay, so as far as I understand from your previous annual report, the current investments are cash and equivalents, liquid funds, debt funds, this and that, whatnot. So is it right to assume that even this year, this is around the same, like 110 crores of cash/liquid funds which you have?
So what we have already published the balance sheet, and it shows investment of 102 crore rupees in current assets and 84.4 crore rupees in non-current assets.
Okay, so your 84.4, I see 69. Anyhow, so my point is that for your non-current assets last year, it was given as private equity/venture capital funds which you were investing in. And a few quarters before that, you said that your final aim for such investments was around 100 crores. This is what you said. So does that...
I'd like to clarify. I said that we will go up to 20-25% of net worth. This is what I had said. I never said 100 crores.
Okay. So what is that value now? What is your aim, or what is your... And I'm guessing that this...
No, but in the future, this is not relevant, right? Because now there will be two separate companies. So this whole conversation will not be applicable.
Okay,
The chemical company will be not investing anything in these assets. It will be purely chemical and dividend and those kinds of things. And the investment company will be entirely in these activities and various kind of things.
Okay. So anyhow, as far as your investments, non-current investments for the previous year were concerned, they were mostly into what I understood was very high-tech, this private equity, venture capital, all of that kind of stuff, right? Am I correct in that? It was not the run-of-the-mill equity investments or run-of-the-mill property investments. It wasn't like that.
We are not doing any run-of-the-mill stuff. That I'll agree with you.
Fair enough. So basically, okay, as of this date, the investments which you have made, which are shown as non-current investments, basically are a fund of funds of private equity and venture capital funds.
I'd like to clarify, the figure in the balance sheet also probably includes things like shares in Duncan and all of those things.
Yes.
So 84 crores. So it's the 84 crores that we are referring to includes subsidiary and all that. So leaving all those routine things that have been in the books historically aside, all the fresh investments for the last 2-3 years have all taken place in specialized things, not another. Now please go ahead.
In non-listed private equity and venture capital funds, right?
And also direct and non-listed, not just through funds.
Okay. So I understand. This is what I'm trying. I'm just trying to sort of get a grip on what your outlook towards quote-unquote investments is. So basically, it is not what can be described as listed market. It is you are basically yourself becoming a private equity firm now or a venture capitalist firm, in a sense. Am I correct?
No, I cannot say that is correct. But what I can say is that yes, we are not investing in listed entities and listed equity at all.
Okay, but you started a couple of years ago. Hasn't this been a very, 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 very bad time for you? Looking at the overall, for example, if we take the Nasdaq as a benchmark, and within, is this a good time to do?
It's a fantastic time. I see these things will take time to reflect on the balance sheet. There are certain exits that we have made in this last year, which go and sit straight into the net worth. It is not rooted to the P&L because of Ind AS requirements. So we have had some exits also in this past year. Our portfolio is doing well, but these are all long-term bets and will take time to reflect.
Okay. So one small other question which is unrelated to this. Now that your capacity expansion is completely done, what was the final expense done? Like, what was the final expense on sulfur and what was the final expense on insoluble sulfur? Like, what was the final breakup of your capital cost, capital expense?
So the first thing is you are saying that all our expansions is not correct. We have based on the expansion, the phase 2 will be taken up at the appropriate time, looking at demand. Now the expense is in line with the budget we had earlier shared with you. In spite of the delays, there has been a very marginal increase in the cost. So we are happy to share that it has not impacted the cost of the project.
So what was the final cost of your capital expansion now, phase 1?
So the final cost is somewhere around 155 to 160 crores.
155. And out of this, how much was your expense on the insoluble sulfur and how much was sulfuric acid?
That breakup we do not have here to share because it was done all together. So there were many common expenses. So there is not a very clear-cut breakup on that.
Fair enough. Thank you so much for your time. Thank you.
Thank you. The next question is from the line of Sarvanan Balakrishnan, an individual investor. Kindly proceed.
Yeah, thanks for giving me an opportunity. So the first question is primarily on the total insoluble sulfur capacity in the market, in the primary North American market. Like any direction on that, like what's the exact capacity in the North American market?
Sorry, I couldn't make out what you were saying. I think you will have to repeat because I was missing the name.
Yeah, so the question is, so what's the total market capacity of industry capacity in insoluble sulfur in market capacity in North American market?
You are talking about demand, I would say.
No, I mean the capacity on the ground, like comparing all the players.
So we have Flexes who have a plant in North America.
2 plants.
Okay.
So they are the only people who are present there, and they have enough capacity to meet the American demand and then export some.
So, like, what's the NTPA like that we have on the ground?
What is the
NTPA, like the total insoluble sulfur capacity, right? So, like, what's the exact figure here?
North America, our estimate is that they have roughly 40,000 tons of capacity.
Got it. And like any direction, like where again the supply is sort of again coming down? Since last time when we spoke, like Flexus was again selling off some insoluble sulfur capacity, right? So like any direction on like this supply coming down?
Any direction on what?
On the supply coming down.
Supply?
Yeah.
Coming down?
Correct.
I am not aware of any supply coming down as of now. And I don't think that the supply will come down.
Got it. And also on the other question, primarily on the buyback side, now since like the demand also like looks futile, like now should we like sort of consider like a buyback, so which will sort of again help in bringing the float down? Since the capex also is almost on full, right?
The buyback.
Correct.
So we are splitting the company today, and we have 2 separate entities, right? So these 2 companies are going to take their own decisions going forward as to what to do and what not to do. Today we have very clearly said that whatever investments are there, that will sit in a company which is there for investment, and the other company will continue to do that insoluble sulfur business.
Got it. And in terms of the capital allocation, so like how are we like what's the like the roadmap that we have right now? So since the phase 2 of insoluble sulfur is sort of again put on hold, right? So where again we want.
It is not on hold. Whenever the need arises in terms of quantity, we will immediately get that expansion done.
Got it. And like, what's the cost of capital for the new capex, sir? Like anything on that?
So at the time when we made the budget, it was 60 crores for the expansion. Okay. So that was the budget, but obviously we will reevaluate the cost when we get into the actual expansion time.
Got it. So I mean, like we had a mix of debt, right? Like for the phase 2 of expansion. So like since the cost of borrowing also has gone up, like so will we sort of again revisit that one in terms of like so if we want to like sort of go live on the phase 2 of insoluble sulfur expansion?
So I heard that you were saying that we have mixed there and is the cost of borrowing going up? I couldn't get the second part of it, please.
Yeah, mainly again the cost of borrowing going up.
It has not
and
gone
the
up
cost of capital.
now, but obviously it will go up in line with the increase in the global rates of interest. So that will be there. But as of now, we have not seen any increase. But yes, it will go up shortly whenever the reset of the interest arises in terms of the increasing lending rates by central banks.
Got it. And also, at this point, what's the current market share that we have in the North American market share?
So globally, we believe that we have a market share of around 10%.
Got it. So again, eventually, we would want to again hit the 10% number, is it, on the North American region? Hello?
Yes. So you are asking whether it will be 10% or more. Is that your question?
Exactly. So because since currently Flexus is having 40,000 MTA capacity on the ground, right? For insoluble sulfur.
What we do plan is to grow at a pace which is higher than the demand growth in insoluble sulfur. So that means that obviously we are looking at a increase in our market share in coming years.
Got it. Makes sense. All right. That's it from my end, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Samarth Singh from TPF Capital. Kindly proceed.
Thank you for the follow-up. Conservatively estimated, what is replacement cost per ton for a greenfield IS plant today?
So it's very difficult to say. Let us first complete the next phase of expansion, and once we have done that, then we will review based on the payback that is there at that point of time. That what is the what will be the appropriate time to go for future expansion?
No, I was not asking for when is the future expansion. I was just asking you what is the replacement cost per ton if you were to estimate today for a greenfield insoluble sulfur plant.
Okay, let me tell you. I think it could be as high as even 3 lakh rupees a ton.
And that was, I think, was about 1.8, 1.75 lakhs, about 2 or 3 years back is the number you're given. Is that right?
But that may have been without taking land and all, right? Since we did brownfield, now you're asking greenfield, so I've added cost for land.
Okay, I see. Okay, that was that. Okay.
It will be minimum this much. I think it could even be higher.
Okay, that's very helpful. And just one, I think Anurag had made a statement that by Q4 of this year we will be utilizing the new capacity. Is that correct?
So he said that there is a chance that some of it could start getting utilized by Q4. Yes.
Okay, some of it will be. And that
it all depends on how the allocations and all come through. In terms of approvals, we are sitting pretty well now. Earlier, approvals was a challenge. Approvals are, we have decent amount of approvals. Now it's about getting the allocations.
Right. And this expanded capacity is largely for the North American market. Is that right?
No, it's global market.
Okay. But we're not looking to largely grow in North America. That was my understanding.
North America obviously is going to be a focus area of growth.
Right. Okay, and thanks. And last question, what is the expected timeline for the demerger?
I think a year from today, we should have two separate entities already. It all depends on how long NCLT takes and all of those things. Anywhere from 10 to 12 months is what people say is the time taken to have the new entity listed and up and running.
Got it. Okay. Very helpful. Thank you very much.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I would now like to hand the conference over to the management for closing comments.
I take this opportunity to thank everyone for joining on the call. I hope we have been able to address all your queries. For any further information, kindly reach out to us or SGA, our Investor Relations Advisor. Thank you once again.
Thank you.
Thank you. On behalf of Oriental Carbon and Chemicals Limited, that concludes this conference. Thank you for joining us. You may now disconnect.